The government steps into the PwC scandal as the AFP looks at criminal charges against the financial services giant. Get set for energy price hikes of 20 to 25%. And not even Snoop Dogg can save slumping sales of wines at Treasury estates. It's Friday, the 26th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, your interview today is an absolute cracker. You are speaking to Stefan von Imhoff, the co-founder of alternative investing community fund Alts.co. This is basically a lesson on investing in art.
Yeah, so when you think about investing in art, I always think about investing in masterpieces or things that I would never do. Well, no. You can invest in prints and make money. You can invest in parts of masterpieces, as in you can go into a fund that invests in a masterpiece. Really, really fascinating chat with Stefan about the state of the art market. And the art market is very, very broad.
Yeah, it's a really good one. It's coming up a little bit later on. The main story this morning, though, Sean, is a big one. The PwC scandal has escalated sharply after the Federal Finance Department directed the Big Four consulting firm to stand down any personnel who knew about tax leaks from government contracts.
Finance Secretary Jenny Wilkinson emailed senior staff on Wednesday and said the government's 413 contracts with major suppliers will be tightened so that existing and future contracts could be cancelled for bad behaviour. We're not just talking PwC here, we're talking all contracts. She also said the department has directed PwC to stand down personnel who knew of the government leaks spread by former partner Peter Collins. She called the leaks an abuse of confidence and trust. She also said procurement rules would be changed to provide greater flexibility for contract managers to terminate a contract for material breach. Now, the background to this is that Collins did work for the government, having signed a confidentiality agreement back in 2014, and then took his knowledge from that work to win contracts for PwC. The leaks were used to win work from 14 new clients on how to sidestep new tax laws. These are laws that Collins had advised the government on. He then came out and said how you sidestep these. PwC charged those 14 new clients fees of $2.5 million for it. Collins has been deregistered, but it's emerged many other PwC staffers knew about the practice, and the group CEO stood down earlier this month. Treasury has now referred the scandal to the Australian Federal Police to consider a criminal investigation.
Now, this one's been kind of bubbling along for a while now, Sean, and we've been talking about it for a while, but is this the most significant kind of action yet? And I suppose the next question is, will there be more?
Yes and yes, really. Wilkinson said Treasury and Finance are coordinating advice on how to deal with PwC from a whole of government perspective. And that's a challenge because this year PwC has already, this financial year, PwC has already been awarded $255 million in government contracts. I'm guessing they won't get too many more. Anyway, the Greens, very influential in the Senate, have been very critical of the firm yesterday, questioning why the AFP, the Federal Police, hold 9 contracts with PwC. It is a very complex web. Clearly, this is a disaster for PwC. It's not only the Financial Review talking about this story, also Talkback Radio, the general media. It's a PR mess for the firm because it questions the integrity of its partners. There is no way PwC won't lose business as a result, and not just government business. It's likely to also trigger new rules around how any contractor works with the federal government. That's basically what Jenny Wilkinson was saying yesterday. The ramifications will be much, much wider. Amazing story, this one.
Yeah, big story and fascinating to watch it unfold. Local markets, Sean, how did they perform yesterday?
Well, the local market, the S&P ASX 200 fell more than 1% to 7,138 points. That followed a poor lead-in from Wall Street, while the tech stocks did okay, and healthcare and utilities sub-indices all closed in the black. Everything else looked a bit dire. Financials and materials companies were worst off. Most of the negativity flows from the ongoing saga of whether the US government will be able to pay its bills from next week by lifting the debt ceiling. Michael, it was a sea of red out there yesterday.
We have not had a sea of red for a long time, have we?
Yeah.
And as we've discussed, I mean, the sea is not red. You need something that is actually red. Use a more appropriate analogy. It was like a volcano of red because that is where lava is.
Well, it's more orange, isn't it?
Oh, so now you're kind of calling that into question. You choose a funny time to be a nitpicker sometimes, Sean.
That's true. Gold digger Northern Star fell 3.6%, while iron ore giant Fortescue was off more than 3%. BHP and Rio were both off more than 1.5%. ANZ led the banks lower, losing 2.5%, while Macquarie Group, Commonwealth Bank and National Australia Bank were all off more than 2%. It was the defensive stocks that did best. They're the ones whose revenue seems to hold up in tougher times. CSL did pretty well yesterday. Well, at least it outperformed. Woolworths, Coles, WiseTech Global, they all did pretty well. But at the end of it all, pretty rough day for the market, Michael.
Yeah, sea of red. International markets, Sean, what's going on there?
Well, the US, the world's largest economy, has been put on credit ratings watch as the negotiations between House Speaker Kevin McCarthy and President Joe Biden drag on over lifting the country's debt ceiling. McCarthy did say a deal was possible, but that didn't prevent Fitch Rating putting the US's AAA credit rating on watch. That's dragged on global markets. Equities certainly fell. There was a general shift towards safer assets around the globe. That's what we saw in the ASX yesterday. One casualty has been the Aussie dollar, at least against the greenback, which is now trading at not much over 65 US cents. That's its lowest level since November last year, which coincidentally was when I went to the US and needed to change greenbacks. Also like to add, as you know, Michael, in the next couple of months, I have to go back to the US for a week, and I'm very confident that the Aussie dollar will fall just as I'm heading over.
I love that the only place where you can be trusted to be consistent, Sean, is your self-interest.
Check out.
Indeed. Check out. Self-service, I think one of our nicknames was for you. Anyway, there's plenty going on in local markets. We've got plenty coming up. We'll be back in a moment with the rest of the day's business news. Sean, power bills will jump by hundreds of dollars a year, rising by up to 25% from July 1, really adding to cost of living woes right across the country.
Sure will. The Australian Energy Regulator yesterday said it will allow the default market offer to rise between 19.5% and 24%, which is slightly more than its draft ruling of a couple of months ago. It follows an 18% increase in the default market offer last year. Now, the default market offer, it puts a price cap on what retailers can charge customers who remain on standing offers. These are people who aren't shopping around. Many people are in this case. They just take what they can get. About 600,000 households are still on the default market offers in New South Wales, Southeast Queensland and South Australia. Small business customers are also facing increases of a little under 15% through to 29%, depending on their region, according to the regulator. The announcement came as Victoria's energy retail regulator said default market offer prices in the state will rise 25%. That's even more. In New South Wales, it's around 22 to 23%. South Australia will be 20%. When asked about these big price hikes, Prime Minister Anthony Albanese deflected it, shall we say. He said the Australian Energy Regulator Chair, Claire Savage, said that energy prices were 40% lower than they were in October last year, and any increase could be blamed on historic mismanagement, i.e. the previous government.
Oh, that is a tough one, considering there are a lot of election commitments made about lowering power prices.
Yeah, it was one of the major election commitments, and it just hasn't happened.
Indeed. Now, Sean, not even Snoop Dogg, I mentioned this at the top of the show, doesn't seem to be able to save the falling sales of wine label 19 Crimes, which is part of the Treasury Wine Estates portfolio. Yesterday, Treasury's boss Tim Ford said the brand was slipping.
That's right. The iconic rapper is the face of 19 Crimes brand and one of the key reasons for its great success in the US. But things aren't going so well at the moment. Treasury Wine, of course, also owns Penfolds, Wolf Blass and Wynns, and yesterday warned of a downturn of consumption of wine, particularly your style of wine, Michael. It's cheaper varieties, notably here in Australia and the UK.
Hang on. Did you just sledge me in the middle of that?
So remember, the last couple of days we've spent quite a bit of time together and we've been to a couple of functions, and I noticed you turning your nose up at these highbrow wines we were being served.
I'm a man of the people, Sean. I'm sorry. Please go on. I'm happy to represent just the common man, me.
Me. I'm sure you are. Happy to represent you.
You can talk. Please go on.
So, Treasury Wines came out. It said that it expects that this slump, or this downturn at least, to continue for a while yet. It's going to implement a range of cost-cutting initiatives, consider new supply arrangements, and potentially divest some of its brands. Its share price fell nearly 8% yesterday, the worst for the top 200.
All right, now Mike Cannon-Brookes is close to securing a deal to acquire Sun Cable, beating out billionaire rival Andrew Forrest for the $35 billion clean energy mega project in Northern Australia. This is all according to a report in The Australian today.
That's right, we like this project. So both billionaires had stakes in it, but it was placed into voluntary administration in January after Dr. Forrest and Mr. Cannon-Brookes clashed over funding, management and strategy of the company. Apparently, the deal is now close to completion and Mr. Cannon-Brookes is on course to win. A victory for him would pretty much revive Sun Cable's original business plan on exporting solar-generated electricity to Singapore via a near 5,000-kilometre cable, of which 4,200 kilometres would be undersea. Incredible to think of that technology. A lot of scepticism about the viability of a 4,200 kilometre undersea cable. That's about 5 times bigger than the longest submarine link so far in operation.
Hang on, so 5 times longer, 5 times bigger than the longest one that's currently there. Where's that one? I'm assuming you're going to know this.
I didn't know it, but I knew you'd ask me, so I looked it up. It's called, I love the name of it, it's between Britain and Denmark, and it's called the Viking Link. It's about 800 kilometres. Isn't that a great name? The Viking Link.
Oh, the Viking Link. That is fantastic. The Viking Link sounds like a ride at kind of SeaWorld, doesn't it?
Look, that didn't occur to me, I've got to be honest, but yeah, I'm with you now that you're talking about it.
Excellent. Goodness me. We go in some odd directions, don't we, sometimes? Let's go in a very kind of sensible business direction now. Shares in agribusiness Costa jumped more than 7% yesterday after the group predicted that its 2023 harvest in China and Morocco will generate strong returns.
Do you know why I like this story?
I've got absolutely no idea why.
How often do we talk about plantings in Morocco? Never.
I think this is our first time.
I think so, I'm pretty sure. Costa's become a really global business, and it's actually fortunate because its domestic growing has been hit by extreme weather in Australia, and that's hurt its overall performance, or at least it did last year. At its annual general meeting yesterday, Chair Neil Chatfield said the international operations are on track for an improved performance. He highlighted new blueberry variety plantings in China and Morocco. Very big in blueberries, Costa. It's actually targeting 700 planted hectares in China by 2026, while in Morocco, it's replanting its northern farms with premium Costa blueberry varieties.
Gosh, I learned some strange things on this show. I don't even know where to go with that, so we're just going to move straight on.
Fair enough.
Woodside Energy is hopeful it can take advantage of the US's move to back natural gas projects in the Indo-Pacific that boost energy security.
Yes, the critical minerals sector gets all the spotlight, but the Biden administration is also moving to fund gas projects that supply Japan, India, and what the US says are other like-minded countries in the Indo-Pacific region. Woodside Chief Executive Meg O'Neill said the LNG producer is in a very strong position to benefit, particularly given the US President Joe Biden and Australian Prime Minister Anthony Albanese signed the Climate Critical Minerals and Clean Energy Transformation Compact. O'Neill took a pretty good swipe at policy settings in Australia, particularly the lack of support for carbon capture and storage. She said the US is now very much at the forefront of the global energy transition because it doesn't let perfect be the enemy of good.
Commonwealth Bank has spent a day talking to large investors about new technology at the bank, including an app which the bank hopes to roll out to nearly 8 million users.
Yeah, so Australia's largest bank has 700 software engineers. I thought that was amazing. Anyone else have 700 software engineers unless you're a big tech company? Probably not. Not in Australia anyway. And they're very much regarded as the lead major bank in technology terms. Commonwealth Bank is set to launch a new banking app for the 7.7 million app users who combined log in 9.2 million times a day. The idea behind this app is it just makes it easier to get all your accounts in one, including CommSec securities on your CBA app. It's also going to launch a smart mini payments terminal. Now, at the heart of this is generative artificial intelligence, and Commonwealth Bank has been spending years working on this. It hopes generative AI is going to help cross-sell products, prevent scams, and aid call centre staff in answering customer questions. Watch for that new app coming soon.
All right, one last one, Sean, before we get to international news. The AFR's Rich List is released today. I love these lists. We've got iron ore magnate Gina Rinehart taking the top spot for the fourth year now, worth $37.4 billion.
Yes, next is perennial number 2, Andrew Forrest. I'm sure he wouldn't like that phrase. And then packaging king Anthony Pratt. 90-year-old Harry Triguboff, the owner of Meriton, comes in at number 4, followed by Clive Palmer. Now, I always was a bit surprised that Clive Palmer was so wealthy, but his wealth grows by about $500 million every year because about 40 years ago, he pegged iron ore tenements in the Pilbara. He now gets a $500 million royalty check from Chinese-owned CITIC, who mines those tenements. That's where he gets a lot of his money. Didn't even realise that. There you go. Rounding out the top 10 are the Atlassian boys Mike Cannon-Brooks and Scott Farquhar, Glencore boss Ivan Glassenberg, Canva couple Melanie Perkins and Cliff Obrecht, and Westfield Doyen Frank Lowy.
All right. In international news, Sean, chipmaker Nvidia's share price has surged on Wall Street after it said booming demand for artificial intelligence processors pushed sales well beyond expectations.
When we talk about the big tech stocks, we normally go with Apple, Microsoft, Amazon, Alphabet, which owns Google. Nvidia is actually in that league. It's bigger than Meta, it's bigger than Tesla, but consumers don't buy computer chips, so we just don't hear much about it. Nvidia is now the 4th largest stock on Wall Street. There are predictions it will one day be larger than Apple. Yesterday it said sales in the 3 months ending July 11 will be about $11 billion. Now, that's about 50% higher than investors expected. That is quite an incredible beat. Nvidia is benefiting from the artificial intelligence frenzy and has positioned itself as the top provider of components for training artificial intelligence software. The best way to demonstrate the hype around Nvidia's future in AI is to consider this. It is more than 6 times the size of Intel, the chip maker, in terms of market capitalization. That company has more than twice Nvidia's annual revenue.
Hang on, so say that again. It's more than 6 times the size of Intel.
Yeah, with half the revenue.
Okay.
People are so excited about this stock. That's when you get tech stock bubbles, I reckon.
Oh, this is an exciting thing to watch.
It is.
Okay. Well, Sean, one last one to finish off on. Probably not quite as exciting, I suppose, and probably not actually good news. Germany is in recession, with its gross domestic product falling in the first quarter of the year.
It means Europe's largest economy slid into a mild recession, according to downwardly revised official figures released last night. The world's 4th biggest economy contracted 0.3% in the 3 months to March. That's its 2nd consecutive quarterly decline in GDP. It fell by about 0.5% in the final quarter of last year. Hence, it meets the definition of a technical recession.
All right, up next is the Fear and Greed Daily interview with Stefan von Imhoff, the co-founder of Alts.co, for a lesson on investing in art, something you know a lot about, Sean.
Yes. Well, I do now that I've spoken to Stefan. I had no idea when I went into that interview. Well worth a listen if you like, not just investing in art, generally investing, because it just sort of opens the diversification of assets you could buy.
Yeah, it's a really good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 26th of May, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook, and stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode, and you can grab yours now at amazon.com.au. I'm Michael Thompson. That was Fear and Greed. Have a great day.